Mr. Kranthi Bathini of WealthMills Securities. Thank you for joining us here on Last Six. Great to see you after a long time. Now, a status quo was expected. Yeah. So a status quo was expected from RBI this time around, but we saw a big dip in, Nifty right from the word go, right, as Mr. Das started speaking, and overall we lost about 1% today. What do you think disappointed the street, sir?
Yeah, one thing is markets are in a overbought zone, Suyash, and whenever market is getting into they struck up in a range. Okay, the higher note of the market,
Uh,
markets have been witnessing profit booking always. That is the reason, as the speech progresses on, market went into the negative and we witnessed some kind of profit booking at the top of the market. So one thing is proven always in Indian markets nowadays. Whenever there is a dip, it's giving a good opportunity for the fresh money to flow in, and also for the investors to increase their position, or traders to increase their positions to buy at dips. So at this point of time, I don't see any kind of skittishness or any kind of worry in the market. It is a normal, regular part of the adjustments. Markets have been rallying from last couple of 4 or 5 trading sessions in a vertical way. So after the big event, the monetary policy, and as the RBI monetary policy is not have given any kind of clarity with respect to the immediate rate cut. That's where slightly the market was disappointed, and we can witness a profit booking from that point of time. So market has been waiting for a clear-cut roadmap towards the rate cut is concerned. That's where the clarity has not emerged from this monetary policy. That's where some kind of disappointment we can see in this monetary policy is concerned, Suyash.
All right, Kranthi, then you don't see a major correction from here on, it's just a dip, and perhaps the market will start moving higher after settling, after a couple of sessions?
Yeah, definitely, Shreya. I don't see any kind of major correction in the markets at this point of time, because we need to take into cognizance the entire global space is looking towards the Indian market. Even in fact, we had the vote on account, we can say, interim budget, but the foreign portfolio investors across the globe have been keenly tracking what's happening in India. So there is a lot of ample liquidity has been waiting in the sidelines to enter into Indian market. Coupled with that, we have a strong legion of retail investors, and also the domestic flows have been quite strong. So I don't think so. Imminent correction in the market immediately. The liquidity flows could sustain the market, but we can expect some kind of consolidation in the market here and there. But it's going to be more on stock specific, more on sector specific action is going to take place in the market.
All right, and we are in the midst of the earnings season, and Zomato has reported its Q3 numbers, and the consolidated net profit for the company comes in at around 138 crore this time around, versus a profit figure of about 36 crore in the September quarter, versus a loss of about 347 crore in the year ago period. Revenue, now that jumped by about 65% on a year-on-year basis to 3,507 crore in the December quarter versus 2,121 crore in the year-ago period. EBITDA, which is earnings before interest, tax and depreciation, now that figure comes in at around 124 crore for the December quarter versus a loss of about 3,364 crore in the year-ago period. And if you look at the segment-wise breakdown, also a massive surge across the segments. These are the revenue figures that you can see on your screen. Food delivery business has surged by about 29% on a year-on-year basis, coming in at around 2,025 crore. Now this is the revenue figure. The food delivery revenue comes in at 2,025 crore in the December quarter versus 1,565 crore in the year ago period. Quick commerce business, which is Blinkit, has surged 113%, essentially has more than doubled on a year-on-year basis, coming in at 644 crore in Q3 versus 304 crore in Q3 of FY23. hyper pure business, which is a B2B business of Zomato, has surged by about 104%. Again, revenues have doubled there, coming in at 859 crore in Q3 of FY24 versus 421 crore in the year ago period. Now, I mean, Kranthi, coming to you, the stock has done phenomenally well. You know, it has surged by about 161% on a 1 year basis. Even in 2024 has staged a rally of about 15% or so. What's your initial reaction on the result first, and then what's your take on the stock? Is it something that investors can still get on to, considering the stock has rallied pretty much? I mean, it has turned a multi-bagger in a 6-month and one year basis, sir.
Yeah, the investors, the brave-heart investors who have bought the stock at the lower range of 50, 60 shares, they made a fabulous money. The brave-heart investors. When everyone were negative about the prospects of Zomato, the investors who have such a brave heart, definitely they made for them, it's a multi-bagger. Coming to the point, these companies, the platform companies, the new age business companies, have been learning in a very hard way to make and to become profitable from last 2-3 quarters. The focus has been towards increasing the profitability, increasing the productivity, and increasing the positive cash flows. That was the banner for the majority of these companies in the market at this point of time. That's the reason we could able to see Zomato turning profitable at this point of time and increasing the profitability quarter on quarter. Coming to the valuations of the company, given the kind of the current valuations, yes, there is absolutely no doubt the valuations look stretched at this point of time. But given the kind of the momentum for these, the headroom for these companies, we can see some more further upside for these companies going ahead. Is this stock is suitable to everyone? Everyone can venture at this, take positions in this stock for an investment horizon. Definitely, this is these kind of companies are suitable for the high risk appetite investors, not for the non-risk conservative investors. Those investors who want to take risk, definitely they can hold on to their position, and one can buy on dips also in their portfolio, given the kind of the opportunity still lying for these companies, and there is a lot of headroom, and business revenues can grow in these companies over a period of time.
A lot of these new age tech companies now, they are making a comeback. Nykaa, the profit doubled on a year-on-year basis. PB Fintech and PB Fintech has turned profitable for the first time. Delivery is another one that has turned profitable. Again, Zomato has come out with phenomenal set of numbers. Anything that is looking attractive to you in this space?
Yeah, Zomato still looks attractive on dips, Suyash. Coming to Nykaa, I have still my reservations with respect to the valuations are concerned. I still further wait for the earnings clarity to emerge with respect to Nykaa at this point of time. But among these companies of the newly listed, right now we can't call them as newly listed platform companies now. They are more than having a earning history in the public domain for more than a year after the listing history of more than a year. But Zomato still looks interesting. One can add the high risk appetite investors. One can add at dips for a medium to long term perspective.
And one of the new age tech companies that is not doing so well is Paytm. Again, I mean, the stock was staging some bit of a recovery till yesterday, but again it ended about 9 to 10% lower as profit taking picks up once again. Now, RBI, I mean, pretty much did not say much as far as there was clarity on Paytm is concerned, although they'll put out FAQs on the Paytm entire issue, sometime next week. But Kranthi, coming to you, what's your overall analysis of Paytm? Because, I mean, this deadline of February 29th, from what I understand, RBI is not ready to, have a dialogue as far as compliance issues are concerned. So what happens when February 29th comes? Is the payment business shut for good? The bank business?
Yeah, definitely it's going to impact on the negative way. But whereas shares, when we analyze the entire Paytm business is concerned. One is the major part of the business that comes from the wallet business, whereas the Paytm Payment Bank business is a nodal bank which will be supporting the operations of payment Paytm for all their fintech payment digitalization, digital payments are concerned. It provides the users a seamless facility to make their payments. So once the restrictions of RBI that's applicable from the deadline what RBI had given, and today also they're not in a mood to give any commentary with respect to the any kind of extension or relaxation towards the payment Paytm Bank is concerned. Coming to the point, if in this short span of next 20 days, if Paytm can bring the other banks as the nodal banks, which will help them to have a seamless payment facility, then there will not be any operational challenges going ahead. But we need to wait and watch for how the things are going to pan out in the next couple of weeks. But one thing, the stock responded negatively today after some kind of recovery it exhibited in last two trading sessions. RBI has been kept on cautioning Paytm Payment Bank with respect to the irregularities and the compliance requirements. They need to comply with the regulator. That's where RBI have found the lacuna with respect to Paytm Payment Bank is concerned. Because see, when you have a Paytm bank, you cannot call it as a fintech company. Of course, they run with respect to the payment system. Banking regulator is involved, so they need to give utmost importance to the compliance, and they cannot banner themselves. We are a fintech company, we cannot comply with them. It's not possible. That's where the RBI have given, you can say, the their restrictions on the Paytm Bank, which hampered the entire operations and sentiment on the stock. So ahead, how they are going to have the next nodal banks, different other banks, to support the seamless payment system, that is extremely crucial. If there is some bigger lacuna, then the operations
Right.
of Paytm take a bigger hit. Taken into cognizance also, Shreyas. Paytm has in digital payment system or in the FASTag wallet system is concerned, they have a strong base wherever. Even if you visit the bottom of the pyramid, Paytm is a node, and people have been accepting the payments through the digitalization system, and they
Right.
revolutionized the payment system in India. So they need to have better compliances. That's where
All right.
Paytm need to work towards that, complaining with the better compliances.
All right, Paytm needs to work as far as compliance go, and for the stockholders, it's a wait and watch. That's a word from Mr. Kranthi Bathini. Sir, thank you for joining us here on Last Week. Always a pleasure speaking to you. Thank you.
Thanks, Shreya. Always my pleasure to share my views with you.